JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 27th of January 2021. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're gonna have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, guys, jumping into the charts, the first one I want to pick up here on is the German index, the DAX, and as you can see, it is selling off heavily. And this morning, what I said to you guys, that I'm going to be very careful. I'm going to be very, very careful with this all because, in a way, you can see that yes, we had this tendency that sorry guys, I hope you can see me and hear me okay, because it seems that I'm struggling with a bit of connection here. Well, anyway, back to normal here. Like I said, this morning I said to you guys that it seems like we are confirming this pattern here, where initially we get a break below the 21-day EMA, but then the following day the candle ends up being above it and continues to push higher. So we had a similar scenario here. However, I was telling you also, guys, to keep an eye on this downside line, which in a way, if it remains intact, could send the index back down. And well, I mean, you can see that the index didn't even travel to this downside line, and instead reversed back below the 13,795 territory. I spoke about this level as well, and basically, you can see that it drifted lower. It tested the 13,672 territory and actually continued to drift further south below it. My next target there was this, the low of the 5th of January near the 13,566 territory. And as you can see, it got tested as well. So basically a very nice result here. We had initially dropped below the 13,795 zone. Yes, then the target was the 13,672, which we managed to reach perfectly. And then the last one here, where the current holdup is occurring, is near this 13,566 territory, which is marked by the low of the 5th of January, and which is also the current lowest point of, or actually was the previous lowest point of January, because we've created a new one. So we'll keep on monitoring the daily candle today here. If by any chance it stays below this hurdle, below the 13,566 territory today, then, well, I mean, further declines are possible. One of my good levels here is this 13,060 territory. However, I'm going to consider a potential area in between here, where it currently is right now, and this 13,060 territory. My next little target here will be this little the high of the 22nd of December, and is near the, and which is also near the low, the 23rd of December, and that level is around the 13,442 territory, roughly around here. So that's going to be my next target if the daily candle here stays below this 13,566 zone. Now jumping into FTSE 100, and as you can see, drifting heavily to the downside. So most importantly is that this downside line continued to provide resistance, and of course the index is is trading below the 21-day EMA, which kind of also adds a bit more skepticism in regards to the upside. However, that's of course from the short-term perspective, because don't forget that from the slightly more of a medium-term perspective, well, we do have this this upside line here, which is still kind of in play. Although don't get me wrong, it is a bit of a tentative one, but nevertheless, I'm going to keep that in mind here. And for now, I'm going to continue aiming to the downside. My next target, a very good target here, is this 6,463 territory right here, or in a way you could round it up towards a beautiful number of 64 here. As you can see, it previously acted as a very nice area of resistance, then support. So let's see if it can do the same trick again and act as a good area of support here. So for now, like I said, I'm targeting that level here, and after that, I'm going to take it from there and see what it wants to do after. Now jumping into Nasdaq 100. So looking at this from the kind of and looking at this index and where it closed yesterday, it did have a nice push here back to the upside. It closed slightly in the positive territory. However, after market closed yesterday, after the closing bell, it did skyrocket up until the up to 13,600 level, somewhere around there, and then kind of reversed back down. And looking at the cash index right now and where it's currently sitting at, it's sitting near the 13,395 territory. So basically it's below this hurdle, the one that I talked about this week. Let me just drag this one right here. So this level right here, the 13,433, that was the high of last week, and it's below this level right now. And let's see if it can stay here. If it can, well, then maybe I'm going to go for a bit of a larger correction here to the downside, guys. So let's see how this is going to play out. If it starts climbing back above this 13,434 territory, well, maybe the bulls are not really willing to give up yet. However, to be a little bit more on the safe side, given that the index is already kind of a little bit overextended, I would say, here in the short run, then maybe just to be a little bit more on the safe side, a push above the 13,563 to 64 territory here could do the trick for more buyers, and then we could take it from there. But for now, guys, we are below this hurdle, below the 13,433. So let's see if we can actually go for a bit of a larger correction to the downside. Now jumping into DXY, another index, but this one's a dollar index and is popping higher today. And most importantly is that it's pushing above this 90.60 territory, the one that I talked about to you, told you guys to keep an eye on this one this morning, guys. If also what I was saying, that if it continues to trade somewhere below the 21-day EMA and pushes lower here towards this 89.96, then I'll consider a possible head and shoulders pattern here. But again, until we don't get that break here, we cannot really get comfortable with that idea. But as you can see, this is exactly why it reversed to the upside and is now trading near this 90.60 territory. If it stays above this hurdle today, then my next target is this downside line here, drawn from the high of the 23rd of March of last year, guys, and then we'll take it from there, of course. But at the moment we are at a very interesting spot. Now jumping into silver. Silver is dropping lower, of course, understandable. DXY is popping higher. However, as I've mentioned to you guys previously in my previous videos this week, that for me to consider the downside here, I would prefer to wait for a good drop here and a daily candle close below the 25 area here, the psychological 25 zone, and then I could go for some lower areas. But at the moment, we're just flirting with this hurdle, so let's see how today's day is going to shape up. If we do stay below that 25 zone, then yes, lower levels could be met. For me to consider the upside, still the same game plan remains. I would like to wait for a pop above the 25 point, well, we can round it up here a little bit, 25.90. territory and then aim for some higher levels. Now Ethereum, looking at Ethereum, and this one is dropping lower. Of course, DXY is pushing higher, so ETH/USD here is moving to the downside, but the more important thing here is to keep an eye on this short-term kind of upside support line drawn from the low, the 23rd of December, and of course keep your eyes on the 21-day EMA here, shown as the yellow line. If we see the price dropping comfortably below this this whole zone, then well, maybe we'll go for a bit of a larger correction here, maybe even sub 1,000 level. So let's see how this is going to play out. USD JPY. So finally we are seeing some sort of positive activity here on this pair, but most importantly is that we are breaking this downside line drawn from the high of the 24th of March of last year. Don't get me wrong, we're breaking it again. However, still, let's see how this is going to play out. If this daily candle today remains above this downside line, then this increases its chances. The pair increases its chances for a further move north. However, if you remember, guys, when I was covering this one, what I said to you before, for me to get a little bit more excited with higher levels, I would prefer to wait for a push above the 104.40 level first, because at the same time we would be placed above the 100-day EMA here, and this break here would confirm a forthcoming higher high. So yep, that level so far is the highest point of January. Let's see if it can, if it will stay the highest point of January. But if it doesn't, well, now that's where it could become very, very interesting for more buyers. Now USD Cad, similar story here, pushing nicely to the upside, and yep, it's breaking this short-term downside resistance line here, drawn from the high of the 21st of December. But as I've mentioned before to you guys, for me, ideally, I would like to see a push above the 1.2793 territory right here, and I would like to see that daily candle staying above this area, because what I don't want to end up seeing here is a potential range here. As you can see, we're currently stuck in between these two levels, the 1.2630 and the 1.2793 levels, approximately around there. But if we get outside through this upper side of the well, we could call it a range, then yep, higher levels could be met. But of course, be very careful near this other downside line drawn from the high of the 19th of March of last year, because if that continues to hold, then maybe it wouldn't really last too much. This upside wouldn't last too much, and we could see another slide. So again, be very careful for now. There's a lot of obstacles on the upside. However, at the moment, this pair is showing positive results, and this pair is showing some positivity, let's put it this way. So yep, higher levels could be met. GBP/USD reversing sharply to the downside. You can see that initially this is what I talked about this morning. I was saying that basically, let's see if it can form a new high for January. It did so. It did push higher. The high for January so far is near the 1.3759 level, but as you can see, the pair is now reversing back down, and it's once again coming close to this upside support line. Now again, it's a bit of a tentative one. I mean, I could just try to draw it this way to give it a bit more room. However, this is going to be a little bit of manipulation here. So either way, guys, all of these lines are tentative, but I'm going to stick to the kind of the more flatter one, but just in case this decides to let's say move lower here, but then finds good support somewhere near this upside line drawn from the low of the 21st of December, and then rebounds back to the upside. So for now, again, long story short, in order to consider the upside, I would need to see the daily candle staying above the 1.3746 territory, the one that I talked about this morning. For the downside, well, this is where the interesting bit begins. So for the downside, probably I'm going to stick to the same level at 1.3636. Now, although yesterday we had a bit of a drop below it, nevertheless, this area proved to be a good area of resistance than support. So that's why I would rather maybe wait for a break below this upside line, and then the daily candle kind of staying below the 21-day EMA, and then this could strengthen the downside scenario. And finally, EURUSD. So moving lovely move to the downside here, away from this this 21-day EMA. So this is what I talked about, guys, throughout this whole week. Finally, we got that move, and now the big question here is, can this daily candle stay below this 1.2130 territory that I mentioned several times this week in my videos? Of course, for now everything's looking quite bearish. My next target is the 1.2059 territory, but if that fails to provide support and breaks, then well, further declines are possible, guys. So for now, it's very interesting. Let's see how this is going to continue playing out. But again, at the moment, guys, not everything's looking good here for this pair. And of course, also keep your eyes on FOMC statement today, guys. That's very important. So yep, let's see how that's going to play out. For now, everything's looking quite negative here for this pair. But as I mentioned to you guys previously, for me to consider the upside, I would need to see a push above the 1.2210 territory right here. So guys, I'll have to wrap it up here. This was a quick overview of some of the instruments that I looked at this morning, some new ones, but I hope you found it useful. Thank you very much for watching and listening. Thank you very much for joining in. If you want to catch my video tomorrow morning, as always, my Trader's Espresso, that's 7 o'clock GMT time as always. And yeah, have a wonderful evening, everyone. Bye-bye.